All right, so we're going to look at using market structure to enter a trade, to confirm a trade, and to look for a higher probability. I put this in the advanced market structure section near the end because I feel like everything else is a must-have, like getting through the market structure series, getting through the order flow series, getting through the advanced market structure series entirely before truly going to use this stuff to enter a live trade, right? Like this stuff obviously goes hand in hand, as you can tell by now, right? So as you can see on the right, we have a little legend. Okay, in that legend, I'm drawing the swing market structure in red. I'm drawing the internal in purple. I'm drawing fractal in orange. And then we have a deeper, darker color orange for fractal level 2 structure. Okay, which, you can also call that a different level of internal structure. If you want to call that internal 1, this internal 2, and this internal 3, that's also fine. Whatever floats your boat, right? This is how I'd rather do it for this example. So that's what I'm going to do. So what we have here is a downwards trend, with that downwards trend approaching an area that made sense to bounce from. And we'll pretend that this green box here was an area of interest of ours that we were looking at for quite a while. All right, we were waiting for this zone to be hit. We were expecting some sort of reaction. We had this very juicy demand range that produced a very significant move in the past, and it had inducement on it. It was not mitigated. It was the only demand zone remaining nearby, so we chose that. And, instead of just hoping that this is going to work, we don't predict, we react. Okay? Never predict, always react. You can have the best idea, and that can be invalidated in a heartbeat. Okay? Or you can have not so great of an idea, and that one ends up working. Okay? So don't predict that it's going to work. We wait for confirmation. So we're using market structure for a confirmation to increase probabilities. So as you can see, we have this downward structure in red. Okay, I'm going to overlap it with my doodle tool here. So market structure left inducement on this zone. Not necessarily required for this example, but in this example, I left it that way. Price therefore came up, and then we observed the upwards internal structure, okay, where you had that IBOS, the internal structure shift that likely means that the lower high was put in place. So perhaps we shorted it down, perhaps we didn't. It doesn't matter. So then what happens? Price ultimately produces a move into that area of demand and gives us a reaction. Okay, great. Now I'm going to keep this as simple as I can because it really is simple. All we are doing is we are waiting for confirmation with a market structure change, because we know that when you break an internal level of structure, that generally means that the swing structure is a targeted point. Does it always come up to the swing high, though? No, it does not always come up that high. Things can change, which is why we don't predict. We react. We observe once we're in the trade, and if we get a transition of structure against us, well, we get out of the trade. So we didn't go that far with it, though. We don't have any kind of bearish transition after this bullish one. So I've drawn in a bullish transition in market structure here using internal structure. Great. So that right there on its own justifies a long. However, and I can't stress this enough, one break does not always mean you're going to come all the way up to that high, as I mentioned. So what could happen here is it could be a fake out, and then you can come down and just take you out of that long trade. But is this sufficient enough for a long on its own? Technically, yes, it is, especially if it's in an area of demand. If there was no demand here, I would never consider longing on one break. It's just not good enough for me. If there was no reason to go long, there's no reason to go long, even with a structural change, okay? So what can we do to increase our probabilities? Well, as I have drawn here, you can see that it makes sense to reconfirm. Notice how I would watch for the fractal structure or downward structure that existed from this high point, because what happens every time you break structure on any level of structure? A pullback. You get some kind of pullback. Maybe not right away, but a pullback will happen. Because ultimately, you need to grab more stop losses, more liquidity. So what happened here after this break of structure? You have that Rimsey effect, right? You had this range. You had the initiation out of the range. We're now getting the mitigation back within this demand range for a continuation away, possibly. Okay, we know that. But how can we confirm this a few times just to make sure we get into a better trade? And how can we refine our entry? Because here's the deal. Here's the deal. Let's pretend this part of the drawing did not exist. Let's actually hide that temporarily. If this is all that we've had, then technically speaking, pulling that demand range or even using half of that demand range, it's going to give you a pretty big stop, right? You technically have to cover the high of the demand range down to the low of it. and then to target the swing high, which isn't really great from a risk reward standpoint. I mean, if you did half, it's not terrible, but maybe this is like a $5,000 move from this entry point to the exit point. Well, that could take weeks just for 3% of a gain. That's not really ideal, right? So how can we make this trade better? Well, let's add in what we just removed. This is how we can make it better. We can add in fractal. We can add in fractal level 2 or even level 3 structure. I wouldn't really push my luck with too many confirmations, but what we have here, I call it triple confirmation. Okay. A double confirmation is sufficient for me. A triple is even greater. You don't always get the triple. Okay. You don't always get the triple, that extra part here. So what we're looking at is knowing how RIMC works and knowing that a mitigation is likely, you wait for the next structural change from the downward structure. Okay. So we get that. The downward structure hit a zone of interest. Maybe it was a refined order block with imbalance. And then it comes up and then it breaks structure bullishly right there. Okay. Right on that break, technically speaking, that is the retest. The break itself and coming down to this zone here was the retest. You may not get this additional part over here. How we can usually tell is we can observe volume. If you get a big increase in volume from this low to this high using your fractal 1 structure, okay, and you're seeing a huge increase in volume, if we throw in volume candles here, right? Or, oh, look at that, it's just spiked up like crazy. Well, then in that case, you may not get this additional retest. But if volume isn't really convincing you yet, maybe wait around. Maybe enter half rate here. Put your stop under that low. Maybe enter, a portion and scale in to see if you can get in a better entry, more refined entry. Because let's be realistic here. If you can get this new confirmation on top of the current confirmation, your risk reward is going to be a lot better. Let's do the math here. Let's actually hide this part of it. And let's say that, okay, we had the order block with imbalance that was mitigated. Now we have this new demand range. Let's put our long in. We'll set a limit here for half the trade. Put the stop under that low. We're going to take partial profit right here, because this fractal structure suggests that this would be the next logical weak high. And from there, we would expect a slow move up towards this high based on order flow. So now we have a 6 risk reward trade, meaning the multiplier is now 6 times the initial risk. Wow, look at that. That doubled already, right? It already doubled. Now, adding in that other level of structure, this one, the fractal 2 structure, then you may actually get an even better trade. Perhaps, you can reconfirm it again and just enter on the break here. Just enter on the candle body close here, putting your stop under that low or under that low to get in, just for another confirmation. The more times you confirm, the higher the probability. Obviously, watch volume, right? Obviously, watch volume. It's not every day that you're going to have this kind of situation where you can even use fractal level 2 for a confirmation, right? The most common scenario that you will run into is using these 3, okay? The red, the purple, and the orange. This level 2 for a confirmation entry is not something you'll see every day, right? You won't get that every time. I can promise you that. So don't bank on this one, okay? You don't have to have this one because the retest already occurred, okay? If it's a very poor break that exists between this lower high and the break itself, like let's say it barely breaks above, that's another reason why you may want to wait for yet another confirmation, right? Because it just doesn't look too good. So you had to base all this on each individual trade, right? Everything is different. You're never going to have 2 trades that are identical. They may seem that way at first glance, but realistically, there is no such thing as an identical trade. It's almost like DNA, right? Each trade has its own DNA. Each setup has its own DNA. If you think of it that way, you'll do a lot better, right? You don't want to assume that you'll have all of these opportunities to get in, e.g. the fractal 2 or even another confirmation coming into this again for a fractal 3 structure, right? This isn't something you'll get every day. So this is the general format that we're going to be using to enter any trade, okay? Using any strategy. This is the general format that we'll be using. It's very, very important that you understand this and put it to practice. You'll be seeing me use this kind of stuff, this double confirmation, this triple confirmation, as the course progresses, as I upload more videos to the course over time, e.g. the All Together Now section. And from there, without knowing the format here, which is what we're showing in this video, you're really going to have a hard time with any of these teachings, right? You need to get this down pat. Go down to a random section on the chart. Pick a random place. See if you can find where these transitions occur. Like, look at lows, look at highs. Go in here with the bar replay tool. Go in here with the bar replay tool. Practice it until you nail it. Okay, you need to see how this works in a live environment.